Well, good morning, everybody. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Education section. And on behalf of our Commissioner, David Geragino, and our staff at the Department of Revenue, we want to thank you for attending this morning's webinar. I have two guests with us today. We have Miss Alicia Barrett with our Taxpayer Services Training Area, as well as Evgeny Kuzmin, who is in our audit area, and he will be offering his comments as well on preparing the sales tax return. Now, in taxpayer services, we get quite a few questions about how to prepare Tennessee's sales tax return. Some of the issues are not exactly easy, but many of them are. So the focus on today's presentation is to give you the basics about how this works, particularly how it works in filing on the TENTAP system. That's the electronic filing system and accounts-based system that you use to get information about all of your taxes in Tennessee. So as we get going here, we want to call to your attention the information that's on the slide regarding your audio settings, noting also one question that's already come up about the presentation itself. We will be posting this presentation and fingers crossed, recording of the presentation, which almost always works out fine. We'll put that out there as well, and copies of all this information will be there too. But one very important thing is that we do not need your specific questions in our chat relating to any of the accounts that you might already have on file with us. This is private information, so you do not want to put anything in the chat area regarding your particular account. You see our website here, our email address, and our phone number. Make sure to note that. We're always there to help you, and we want to be able to be there for you anytime you need us for anything at all, not just sales tax, but all of our other taxes as well. So with that, I'd like to introduce you to Alicia Barrett. And Alicia is going to go through the presentation here, and we'll be answering your chat questions as time permits also. And then understanding that we have a large number of people online with us, almost 1,000 people. I don't think it's possible to get to every one of your questions today, but certainly if we don't get to you, we do want you to email your questions in and we'll be glad to respond. So Alicia, good morning, and take it away. Thank you very much. Alicia, we cannot hear you.
Here we go. Is this better?
We hear you fine. Thank you.
Okay, awesome. All right, thank you. So as Billy was saying, this morning is going to be about completing the sales tax return. So I'm just going to go down through the presentation and we're going to talk about a few of the points. The first thing that we're going to do is talk a little bit about a tax overview, just talking about some of the definitions and the laws that actually impact how you're going to complete the sales tax return, along with the due dates, rates, and exemptions. Also going to talk a little bit about the reporting requirements and filing instructions, and mention a few of the resources, so where you can find information on our website, contact information, and then we're also going to have a brief Q&A after the presentation. So the sales tax basics in the law are kind of as follows, and this is for businesses that are located within Tennessee. So businesses that are selling, leasing, or renting tangible personal property, these items are going to be subject to tax unless they're specifically exempted by law. So if it is a piece of tangible personal property, and we'll get into the definition of tangible personal property shortly, but if it is a piece of tangible personal property, it is going to be subject to tax unless you can find it specifically exempted in the code someplace in the Title 67, Chapter 6. So gross sales of over $4,800 per year are required to register for sales tax. Also, selling certain taxable services. So services, for the most part, are going to be exempt from the tax unless they're specifically enumerated by the law or they're necessary to complete the sale of a taxable good or service. And so services of sales exceeding $1,200 per year require registration. We are going to talk a little bit about what taxable services include. Also, selling amusements. And so amusements are going to be any type of recreational activity unless specifically exempted by law. And also selling specified digital products, that is also subject to sales tax. So let's talk a little bit about the definitions that I mentioned earlier. First definition is tangible personal property. So this is anything that can be seen, weighed, measured, felt, or touched, something that's going to be perceptible to the senses. Next thing is the services that are subject to sales tax. So these are services that are specifically mentioned in the law as being taxable. This includes the repair or installation of tangible personal property. It's accommodations, so lodging services and rooms. It's going to be that short-term rental, short-term space rental for making sales. It's also cleaning of tangible personal property, repair of tangible personal property, the parking and storage of motor vehicles, telecommunication services, and the enriching of uranium materials. Another definition that is going to impact how you're going to complete the sales tax return is going to be the definition for food and food ingredients. So our food and food ingredients are taxed at a reduced rate of 4%. This is going to include substances that are liquid, concentrated, frozen, dehydrated, that's sold for ingestion or chewing by humans and are not specifically excluded items. So one of those specifically excluded items is actually prepared food. So prepared food are going to be like for what the restaurants are going to be serving. The food and food ingredients, those are going to be things that you're going to commonly pick up in the market, grocery stores, and what have you. The last thing, the last definition is amusements, and this is talking about charges for entering into a recreational activity. So we're talking about sporting events, we're talking about performances, amusements. We are talking about charges for using tangible personal property. So this might be renting that kayak to go out on the lake or renting the bowling shoes to go bowling. So it's going to be anything that's going to pertain to amusement. Sales price. So the sales price is one of the places that we get the most questions, is what is actually going to be considered to be taxable. So is this part of it going to be considered taxable? Is this part of it going to be considered taxable? And the sales price includes the seller's cost of the property sold and used, the labor cost, the interest and losses, the transportation cost, taxes imposed on the seller, any expenses of the seller, and charges necessary for any services, charges for any services necessary to complete the sale, as well as delivery and installation charges. Now let's talk a little bit about out-of-state dealers. So the out-of-state dealers are going to be basically out-of-state dealers. They have no physical presence in Tennessee, but they make $100,000 or more in sales to Tennessee customers. So this $100,000 threshold, it includes all of the retail sales made by the out-of-state dealer. including exempt sales, but it does not include sales for resale. It is going to be reporting by destination delivery. So when I'm talking about destination delivery, that's going to mean wherever that product happens to be shipped to. Generally speaking, Tennessee is an origin-based state, so that means that wherever that storefront is located at, wherever that sale is being made by the business located in Tennessee, that's going to be the local tax rate that's going to apply to the sale. Out-of-state dealers do not actually have a location in Tennessee, so they are going to be reporting by the destination, so where they're going to be shipping that product to. Before you will be filing sales tax, you will need to register for an account. The best way to register is going to be on TennTap. Your first return is going to be due for the period in which the account opens. So if the account opened in October, that first return is going to be due in November. Returns also have to be filed for every filing period, even if no sales were made. So the assumption is going to be if you're open that you're going to be making sales. And so if you did not make any sales for that period, we do need to get a return from you stating that. The business is also required to close the account within 15 days of the close or sale of the business. So, and they can report that closure through TENTAP. So I've been mentioning TENTAP a lot. And TENTAP is the Tennessee Taxpayer Access Point. And it is our electronic system that allows you to register for new accounts, file, pay, maintain your accounts. And so it's going to allow you to schedule payments in advance. So for example, you're going on vacation, you can go ahead and file the return, schedule the payment to come out on the 20th, but schedule the payment to come out on the 20th, but and it will automatically come out. The next thing that it's talking about is the automatic correction of common errors. So it will keep you from making a mistake on the return. Amending the return. So if you make a mistake on the return, you need to make changes to it. TENTAP is going to allow you to do that. It will allow you to get your resale certificates, registration, access the all of your correspondence, claim a refund, file for a penalty waiver. So many different things are available to you on TENTAP. Filing frequency and due date. So sales tax accounts are automatically set up for monthly filing, and it is going to be on the 20th, due on the 20th day of the month following the end of the filing period. So now, effective on July the 1st, businesses with a sales tax liability over a 12-month period that averages $1,000 or less per month may choose to file monthly or quarterly. So quarterly filings are going to be due on the 20th of the month following the end of the quarter. Now, in order for this to apply, you do actually have to have that 12-month filing history with us. So if your account has just opened, that you would not be able to request it yet. That account's going to have to be open for a year for us to see that you've met that qualification in order for us to be able to switch your filing frequency to quarterly. Next thing that I want to talk a little bit about is the definition of single article. So single article is an item that's a separate unit apart from any accessories, extra parts, that's capable of being sold as an independent item or as a common unit of measure. You're going to report this on Schedule B and C of the return. The entire price of the item is going to be taxed at the 7% state rate. And then the first 1,600 is going to have the local rate applied to it. The second 1,600 is going to have the state single article rate applied to it of the 2.75%. If it does not meet, come up to 3,200, then the sales price is, for like in example B, the sales price was 3,000. And so the 3,000, the 7% is applicable to the entire 3,000. The first 1,600 is taxed at the 2.25% local rate. And then the difference between 3,000 and 1,600 is going to be taxed. So that 1,400 is going to be taxed at that 2.75%. Okay, so let's talk a little bit about how you're going to get into the return. So the first thing on the return is going to be you're going to log into TennTap to file. Most of our returns are required to be filed electronically unless you do have an electronic waiver. So you will need to log into TennTap to file your return. When you get into TennTap, you're going to see something that looks kind of like this. And if you click on File or View or File Returns, you're going to be able to file or amend for a previous period. If you click on File Now, it will allow you to file for the current period. Now, the first question that comes up after you click on File Now or File a Return is going to be, will you be submitting your return using a software vendor? If you answer that yes, it's going to allow you to upload that. If you answer it no, it will open up the fields that allow you to actually complete the return. Now, if you need information on which one of the software vendors are approved software vendors for Tennessee, you will be able to find that information on our website, tn.gov/revenue, click on e-file information, and then click on electronic filing using a software vendor. Now, if you click on no, the next screen you're going to see is a list of your locations. It's going to have your location ID, your doing business as name, as well as your location address. So the location ID, if you click on that, the first question you're going to be asked is, did you have any sales to report for this period? If you answer that no, you can click OK and you're pretty much done. Okay. But most people are going to have sales to report. So you're going to want to click that yes. And then you will have line 1 through 5 will open up for you to complete. Now, the first thing that's going to ask for is the gross sales. Now, I did see a question flip by in chat about the restaurants. All the restaurants are a tax will be applied to sales for restaurants. They just do not get the special 4% rate. So they're going to enter their sales in here just like everyone else does. And so gross sales are going to include cash sales, credit sales, conditional sales, sales that are exempt from tax, leases and rentals of tangible personal property, and fabricating of personal property for consumers. This is going to be taxable services, specified digital products. All of your gross sales will be entered here. Okay. Now, the next thing that happens is it's going to ask you about items that you're basically, to all intents and purposes, the next couple of lines are items that you need to report use tax on. So these would be things that perhaps you used your resale certificate and bought something. You were intending to resell it, but maybe that needed to go. You decided to use that in your business. You decided to use that for personal use. You would need to actually report that amount here, the cost of that property that you purchased, so that the use tax could be applied to that. So that's going to be items that were bought using the resale certificate, but were used for the business instead of being resold. Next thing is going to be entering items purchased out of state for use. So this would be things that you bought from an out-of-state company, brought into Tennessee with the intention of using those in your business. Line 4 is going to be any items that are severed from the earth, like coal and other materials. Line 5 is calculated by the system. Basically, what it's going to do is just add lines 1 through 4 together. Schedule A, this is for exempt transactions. Most of the items on here are going to be exempt. There's going to be a few things that we're going to be also taking out where we can apply the correct state rate to them. And so if you answer yes to the Schedule A question, it is going to open up the fields for you to complete that Schedule A. If you answer that question no, it will not open those fields up. You do have to answer this question though. It is a yes or no question. If you just wanted to look through the Schedule A, make sure that there's nothing that applies there to you, you could answer that yes and move forward and just look through those lines. Let's take a look at some of those lines now. So the Schedule A exempt transactions, the first one is the net food sales. So this is going to be the sales that's going to come from like a grocery store or market, generally speaking, that is going to be the special 4% rate is going to be applied for it. Now, as I mentioned, restaurants are not going to put their food sales, they do not fit the definition of the food and food ingredients. So they're not going to put their sales here. They are going to have that 7% rate applied. The second line on the Schedule A is for sales for resale. So these are going to be sales that are supported by your resale certificate. You are required to collect that resale certificate from the persons purchasing from you and to maintain that for a period of 3 years. The third line is going to be for sales paid for with SNAP benefits. You would not include these, you would not duplicate any sales that you entered on line 1 here. So if you put anything on this line, you would need to subtract it from what you used, from what was being, from what you reported on line 1 of that Schedule A. The fourth line is going to be for sales to exempt entities. So these are also going to be supported by an exemption certificate. So it will be a nonprofit exemption certificate or a government exemption certificate. One of the important things to remember about this is that if you are selling to someone that is using one of those exemption certificates, that they do need to be paying using funds from that particular organization. So you're going to report that here. Number 5 is for items that have been returned. So this is just merchandise that has been returned. And line 6 is going to be for sales of industrial machinery, research and development machinery, and agricultural items. All of these things have their own exemption certificates. And with all of those exemption certificates, the nonprofit, the resale certificates, the government exemptions, agricultural exemptions, you do need to maintain those in your records for a period of 3 years. Line 7 is for sales in interstate commerce. So these are going to be sales that are originating in Tennessee, where the purchaser takes possession outside of Tennessee for use or consumption in the state. So anything that you are selling to someone that you might be shipping to another state, you can enter those sales here. Line 8 is for repossessions. So this is, now repossessions, they do have special rules, and so that you would enter the portion of unpaid principal balances due in excess of $500. You're also going to be using Schedule B to report this as well. Line 9 is going to be other deductions not included elsewhere. So this is going to be like, for example, your trade-ins. There will be sales made using WIC vouchers, I believe is in there. And one of the best tools that you can use for this is going to be the actual paper instructions. So we have underneath tax resources, forms, tax specific forms, and you click on sales tax, you will see a paper form there, but then underneath that, you're going to see the instructions. And those instructions give a very good description of all of the things that you can put here on line 9 of the Schedule A. Line 10 is talking about the sales tax holiday sales. This line is typically used in July, possibly August, for the sales tax holiday. Now this year we do have some sellers, they actually have a year-long holiday, I believe, for gun safes. And so for those particular sellers, that could be used for most of the year. But typically speaking, for everyone else, this is going to be typically used late up for that last weekend in July. Line 11, the system is going to populate this amount based on the information entered in lines 1 through 10. So it's just basically going to do that calculation for you. Schedule B, this is talking about the computation of local sales and use tax. So this is going to be if your local taxable sales does not equal your state taxable sales. So the local taxable sales are going to be like not equaling. That situation might be, for example, when we use that Schedule A, anything that we took out on that Schedule A that might need to be added back. The food and food ingredients line, that first line on that Schedule A, is a great example of that. So the first thing, line 1 of that Schedule B, the system is all going to automatically populate this information for you. Line 2 is where you're going to need to make any adjustments. So entering in the total of the food sales and any applicable amounts in returned merchandise and repossessions. Line 3, the system is going to do it. Line 4 is for single article, so any amounts in excess of $1,600 on each single article. Line 5 is talking about energy sales, and line 6 is going to basically remove the specified digital products and vending machines from the typical calculation for the local tax rate, so that special local tax rate can be applied to it. Line 7 and 8 will be calculated by the system. Schedule C allows you, after you've basically used Schedule A and B to make adjustments to your taxable totals, Schedule C allows you to apply the correct amounts, the correct rates to the amounts that you needed to remove. So Schedule C is going to, you do need to answer this question, yes or no. If you do have anything that you need to report on Schedule C, answer it yes. If not, answer that no. Schedule C, so what all does it contain? Well, the first line is about the amounts that you need to apply that special single article rate to. So this is the second $1,600 of any single article sold. The line 2 is going to populate automatically. Line 3 is going to be sales of water purchased at the industrial tax rate, generally supported by an industrial machinery certificate. So lines 3 and 5 are going to be operating off of that. Line 7 is going to be for aviation fuel. Line 8 is for sales of taxable water carrier energy fuel. Lines 9 and 10 are populated by the system, and then lines 11 and 13 allow you to apply those special, enter the amounts for the specified digital products and merchandise sold through vending machines. And then the system is basically going to populate the rest of it. So Schedule D, E, and F, these are only going to populate for you if you have the account set up to where they are needed. Okay, so Schedule D will show up if you are in the area of downtown Nashville that is subject to the CBID fee. CBID fee is the Central Business Improvement District fee. And this is just, like I said, that downtown area. Schedule E is for sellers that are located outside of Tennessee. So if you have on your, when you click into your location, if you see that there is an out-of-state location address, it will ask you if you want to report using destination delivery. And that's basically going to be your schedules. That's going to be your Schedule E. Schedule F is for local occupancy tax on short-term rentals. And this will populate for those short-term rental marketplaces. So after you have completed the return and you have submitted it, you will input your password as your signature for that return. You may want to view or print the return. So if you click on View File Returns, and you can click Print to get a copy of your sales tax return for your records. TennTap does maintain that for you though, so no worries there. Occasionally we will find that we all make mistakes on occasion. So occasionally you may find that you want to amend a return. So to make these changes to the return, you can just click on File, Amend Returns, find the period that you want to make changes to, and click on View or Amend the Return. Now, if the amendment is made after the due date of the return and it results in additional tax owed, penalty and interest will calculate on the difference. So we've got a few resources listed here, tn.gov/revenue, always a great source of information. Revenue.support@tn.gov. And then of course you can call any one of our representatives and get information about the sales tax return and help completing that. So we're going to go ahead, I think, and open up the floor to questions. I think Billy and Evgeny, you guys have got a couple of things to cover, I believe.
Well, Alicia, I think so. So I think we can very easily see that your discussion has generated quite a few questions. So we appreciate the fact that so many of you have asked questions, and I've attempted to go through and answer a number of those as we've gone through. I cannot type that fast. It's not possible. but we're very, very happy to respond to your questions. I put in chat the links here that you see on your screen here for our email service and phone number as well. We're not going to be able to physically answer every question. It's just not possible. But Evgeny and I are going to go through some main things that we saw come up in the chat and things like that. So Evgeny, let's talk for just a second about out-of-state sales. So if I'm a Tennessee-based business and I sell things outside of Tennessee, what am I essentially doing with that? Can you explain that briefly for us?
Sure. So I saw a few questions there, and I'm going to try to cover a bunch of them. If I don't cover something, please excuse me. But you can always email those to revenue support, and then we'll answer them that way. So for in-state locations, taxpayers that have in-state locations that have sales to customers outside Tennessee, you guys would report those sales. You'll include them in line 1, and then you would exempt them on Schedule A as interstate commerce sales.
Okay.
For taxpayers who are outside Tennessee, let's say if there are participants in this room that are, for example, they have a Kentucky business and they sell to Tennessee customers, but also sell to, I don't know, New York. You guys do not need to be including those New York sales on your tax returns. You only need to be including Tennessee sales on your tax returns, in your gross sales.
Yeah. The details are important, aren't they? As far as who's
right.
where and all that kind of stuff. Yeah, absolutely. Um, another thing we get quite a few questions on are online businesses. I think there's a mystery behind the online business versus the brick and mortar business. And one thing I'd like to point out, if you don't mind, is just the fact that it's essentially the same. So in Tennessee sales tax law, it whether you sell something online or you sell it through a brick and mortar store, it makes no difference at all. If you're located in Tennessee and you're making a taxable sale here to a Tennessee customer and not out of state, like Evgeny just said, then it's subject to Tennessee state tax and local tax as well. It sure is too.
Right, and I'd say it's worth noting the in-state taxpayers, and I think Alicia said something about that. They report tax based on origin, so it's origin sourcing based. So that means that if you have a business in Nashville, it doesn't matter if it's brick and mortar, like a store somewhere downtown, or if you selling something from your garage online, all that local tax will be sourced to that Nashville location. Now, if you have a Kentucky business and you sell in different locations in Tennessee, let's say you have customers in Knoxville, you have customers in Shelby County, in Nashville, all of those sales will be sourced to those specific customer addresses based on where you deliver the goods or where you ship the goods.
Yeah, and to tag along on that too, Evgeny, the thing that a lot of people will ask us is, well, where do I find out all these rates and all this information? Well, I put a link in the chat section there to the sales tax area of our website that will take you to pretty much all the information about sales tax that we have. And by the way, we have a ton of it, a literal ton of information out there on our website about this. The local tax rates for every place, and as well as a lookup that you can type in an address and that sort of thing, it's available out there. So you can find that information. And maybe this is a good time to probably mention something that seems so basic, but probably something that doesn't hit your radar, particularly if you're a new business. Starting early on your sales tax return is a really good idea. In taxpayer services, we will typically around the 20th of the month get busier with phone calls and emails about, hey, how do I do this? Hey, I can't get the TENTAP system to do this or whatever. Well, one good thing to do is to probably start on that a little bit earlier in the month and to go ahead and get your figures input and saved. And in fact, one thing that you can really probably get in a really good habit of doing is completing the tax return early. Then when you schedule your payment, again, you can schedule the payment. Some taxpayers are like, I really don't want to pay the tax early. Okay, good. Don't pay it on the 20th. Okay. You can do that through ACH debit from your checking account or your savings account, whatever bank account you've got. There's no charge to that. If you choose a credit card option, there's a small service fee for the credit card company that they charge on that. But you can schedule that payment to come out on the 20th, and then you don't have to worry about it anymore. You know that you've got all your figures input and you've asked us questions and reached out to us on anything that's outstanding on that as far as that goes too. But folks, let's talk for just a second about filing frequency, because that came up in quite a few discussions here too. So let's talk about that. Alicia, I don't know if you can unmute or hear what we're talking about here too. Can you talk for just a second about how we in Taxpayer Services handle these filing frequencies and information?
Absolutely. The best time to make the request is probably going to be, especially, I would say probably at the after it has been after your first year is up. Okay. So you would need to be in business for a year first. And once you've been in business for the year first, then you can either, there's a couple of different ways you can do it. You can do it through Revenue Help, or you can call in to 615-253-0601 and request for that filing frequency to be changed. The account will be reviewed. You will have to more than likely, well, you will have to send a request in writing. So Revenue Help might be the best way to go. But if you do choose to call in, they will give you information on where you can send a request, whether you can email that to them directly or put something in the mail, depending
Yeah,
on what your
and it's a
preference
good,
is.
Alicia, it's a good thing to probably point out here too that the typical filing frequency is monthly. That's
Yes.
what we do. The more unusual filing frequency is quarterly. These are designed for businesses that don't report a lot of income. They're smaller businesses. Okay. Annual filing is done in rare occasions for certain businesses that have very little income to report. They may have a lot of income that's exempt that we show on there too. I'm thinking of contractors as maybe an example of some of those folks that do that.
Sometimes manufacturers and wholesalers, I
Yes,
think, as well, Billy.
yes,
So
yeah, that's fine too. Looking at a few other questions here, I made a couple of notes here too. Um, about single article tax. Oh my goodness, the state single article tax is a little difficult to explain. But do either one of you want to jump in and kind of give a little rudimentary definition of that? If not, I'll do it. What do you guys think?
Sure. So like Alicia said, so it's basically a single unit of measure. So like one of the most common examples is a vehicle. So a car, you buy a car is a single unit of measure, obviously. So it's subject to a single article limitation. Um, it's a little weird the way the calculation works, but obviously, so the first $1,600 is taxed at a local rate. Then you have $1,600 on top of that. That's taxed at single article state tax rate, and then everything in excess of $3,200 is not subject to local tax. Um,
Yeah, that's
so
a good point too. I'm sorry, I didn't mean to interrupt you, sir.
oh, go ahead. That's fine. So if like a lot of times people will say, well, how do you say, if it's a single unit of measure? If you think about it, car, it's composed of a lot of different, parts. So like wheels and I don't know, stereo system. There's like a lot of components to it, but it's considered a single article because you buy a car, like it's combined, like all those parts are combined into one single piece. So another example that's kind of throws a lot of people off. When you buy a furniture set and it consists of, let's say, a couple sofas and a table, that set is not a single article. Even if you invoice it as a set on an invoice and you charge $5,000 for it, because there's one line item on an invoice, it does not make that set a single article because it consists of, obviously, well, I named three. So there's two couches in the table. So each of those is a single article. Um, so that's a good distinction to make there as well.
Yeah, that's a good point too. One thing I try to do is visually tell people about if you picture a line that starts at 0 and it goes to uh, whatever the purchase price was, whatever many thousands of dollars that might have been. Just understand that everything on that line is subject to 7% sales tax. We're not talking about food here. I think that's an obtuse example about a food item costing more than that. So we will ignore that. So anyway, 7% for everything. Local tax for the first $1,600 only. Okay. And by the way, there's a few places across Tennessee that it's not $1,600. It's a smaller amount. Not going to talk about that right now. But anyway, for that next 1,600, from $1,601 up to $3,200, that's what's subject to the single article tax too. Now, going back to something that seems really rudimentary, and going back, and thank you for Alicia for showing the car example up there once again too, is on TENTAP, y'all. This sounds so basic, but it's so important because we get a lot of questions on it. When TennTap asks you, do you have sales to report? Yes or no. Do you have exemptions to report? Yes or no. Do you have single article taxes to report? Yes or no. You have to answer those questions. And if you don't, it won't proceed. So we get quite a few people every month that say, the TENTAP is broken. It won't go. It won't work. It won't proceed. Well, it's because you've forgotten to answer one of the yes and no questions. Okay, almost all the time. So I know that sounds real basic and everything, and we're all human, but don't forget to scroll down and make sure you answer all those questions. Okay. And Alicia, again,
So
thanks
somebody,
for showing that. I'm sorry, go ahead.
I'm sorry. Somebody just asked, so single articles are articles sold over $1,600. The answer is no. So every single article, regardless of its price, it's a single article. So if you buy a pen in a store, it's a single article. The only reason why this calculation doesn't apply to a pen is because it costs less than $1,600. You would just, apply your local rate and move on. If something is, let's say, $1,700 or $2,000, it is still it could be a subject to single article limitation, and you would apply that single article tax rate on the amount of money over $1,600. So if in case where something costs $2,000, you would pay a local rate on the first 1,600, and then you would pay state single article tax on the $400. So single article, like the price of the item doesn't define single article. It just needs to be a single unit of measure. So it doesn't matter what the price is, basically. The price only comes into place when you try to calculate the tax on that single article.
Right, too. Let's talk for just a second about businesses that are selling through third parties. Okay. People that are hooked into selling on online platforms like eBay and Amazon and other online selling things like that. One thing I'd like to point out is if your sales are exclusively through these third-party agents and they are collecting sales tax, then you do not need to have a sales tax account with us per se, unless there's some other business reason for you to have it. Now, the reason I say that is it's would be inconvenient for you to have to file tax returns with us and reporting zero each and every month. Okay. You can do that, but eventually we would probably close your sales tax account down anyway after we analyze accounts on a regular basis. But you're not required to have that sales tax account if that third party or these third party sellers are remitting the sales tax for you. But even if you have even one sale that's subject to that tax and you meet the threshold for registration with us, we're going to have you do that. Now, the one thing you definitely never want to do is to report the sales that are being made by these third parties on your sales tax return, because then obviously you're paying the sales tax, but it's being collected also by the third party. That's not good. That's an overpayment situation, and it's not something that we ever want to get involved with. We only want the exact amount of tax. Okay, so just keep that in mind. If you have any issues relative to that you want to discuss with us, just send us that email, make a phone call to us, and we'll be glad to talk to you about it. Okay, appreciate that very much too. Resources, y'all. We've got tons of resources. Again, we put information out in the chat about our website and sales tax and things of that nature. We have a lot of frequently asked questions that already have your answers in there. Something north of 1,000 questions, I think, are out there. I don't know what the last count was, but we keep adding to them all the time too. One other very good thing that we have on our website is tax manuals. These tax manuals are being revised. The sales tax manual is currently being revised. We have a guide out there right now, but the manuals themselves for all of our taxes contain great detailed information that is searchable. And we want you to take advantage of all of these resources so that you can get information for yourself. You know, when you're up late at night thinking about your taxes, I'm not real sure why you would do that, but if you did choose to do it, you could probably find your answer. But if you can't, you know what to do. Just let us know what's going on, and we'll be glad to help you too. Folks, do we have any other questions that hit you from the chat, Evgeny or Alicia? Anything else you want to bring up specifically?
I saw one question, kind of follow up on the single article stuff. So somebody asked if services are included in the single article tax. The answer is no. Only tangible personal property is subject to single article tax limitation. So if you have some kind of taxable service, if you repair cars and a car repair costs $5,000 in labor, that labor will not be subject to single article tax limitation.
Right, but a key point with that too, going along with that, is that it is subject to sales tax though, because it is labor, a service that is tied to tangible personal property sales. Those parts are a part of that, and it's all subject to sales tax too. We get that question quite a bit too. And there are only certain services that are subject to sales tax in Tennessee. We have another webinar that it discusses that. It's already posted on our website on some of that information as well. But at any rate, we have a lot of tools out there to let you do that. But again, services in general, most services by themselves not subject to sales tax, but some are.
Right. One more follow up one more question that I wanted to follow up. Somebody's asked to talk a little bit more about the Schedule E destination tax for out-of-state companies. So out-of-state companies with locations which are outside Tennessee that make sales to Tennessee customers and ship it to Tennessee customers in Tennessee, they're also subject to sales tax, obviously, and so those are the companies that use Schedule E. If you have an in-state location, you will not be using Schedule E for anything because if you make state sales from the in-state location, you're not subject to that destination sourcing. You're doing the origin sourcing. So for businesses who are outside Tennessee, just kind of to cover up this topic in a few sentences, you're supposed to be collecting and remitting tax based on where you ship the goods. Billy mentioned that we have a tax rate table posted on our website. That table also lists the tax rates that you're supposed to collect. So local tax in Memphis is different from local tax, some elsewhere in Tennessee. There's a few tax rates that are basically kind of the same there across Tennessee, but a sale that was made in Memphis to a Memphis customer needs to be sourced to Memphis, and then a sale that is made to a customer in Shelby County, which is unincorporated area. So sometimes even if the address states Memphis, but the actual location is outside of the city, that sale needs to be reported to Shelby County. And the way you would do that, you would select on Schedule E, which location that the sale was made to. So I guess that kind of in a nutshell it covers that topic. I don't know if you guys have any other points you want me to cover.
I think that's a good point, and thanks for those comments. One question that one participant had here is pretty basic but important. If all of my sales are to resellers who provided me with resale certificates, then do I need to continue to file a sales tax return? Oh, I can answer that. Absolutely. Absolutely. You have to report your gross, and then you would deduct out all of the certain sales that were made with resale certificates to back that up. You want to keep that in your records, okay? We need to keep those in case, for whatever reason, you're questioned on it. Now, you don't have to provide any of that information to us when you're actually filing. You just have to provide the figures themselves. And it may turn out that it's actually zero. If everything was for resale, then there would be no liability for that particular reporting period. But we do have to have you make that filing. One other very basic thing for any of you new businesses out here that are listening to this, if you don't hear anything else today, make sure you hear this. You have got to file a sales tax return with us for each and every reporting period for which you are registered. Typically, that's monthly. Okay, so if you're a monthly filer, you have got to file a monthly sales tax return with us by the 20th of the next month, or if the 20th falls on a weekend or a holiday, it's the next business day. But we do have to have that, even if there are zero sales, okay? When you register with us, you will see an effective date on your registration certificate. That's when the clock starts ticking, okay? So you cannot ignore this fact. If you do, you'll get assessment letters in the mail showing that you potentially owe hundreds of dollars, which you don't owe. All you need to do is to file that return and to report. If it's zero, report zero. Okay. Then you're good. Everything is fine. So just keep that in mind, please, if you don't mind. And the reason I bring that up so strongly is because we get so many questions about that. And it's kind of like turning on that water faucet. When that water faucet of taxes is turned on, it's running. Whether you're watching it or not, it's still running. So we still need that reporting. Okay. Alicia, do you have any final thoughts for the group as we wrap up?
I do not. I do want to thank everyone for coming though. It's been great to have you guys all here. And we have posted, let's see, let me get, so I think I'm going to go back to the very beginning. And I've had a lot of people ask us about if this was recorded. We have been recording this today. This is going to be where you're going to be able to find the recording. It will be available probably a little bit later on today or tomorrow for you to view. That is also the same place. I had someone ask about registering for another one, for another webinar, because the link had been forwarded to them. This is also the place where you're going to be able to find those upcoming webinars. So anyway, but I just wanted to kind of put that up here for you guys, and I will go ahead and drop that in the chat so that anyone that wants to pick that up can do so.
Okay, that's great. Evgeny, we thank you very much for adding your expertise in from our audit division, proving once again that the audit people are not evil. They are not. They are helpful.
We're just trying to help people.
Right. And what's funny about that, I make a halfway joke about it, but honest to goodness, we get a lot of positive feedback from our audit division and the way that they interact with taxpayers. Auditors doing their jobs, basically ensuring that the correct amount of tax is paid. We get a lot of positive feedback from taxpayers that you would normally not think it would be a positive experience, but it is, because it's a learning
Thanks.
experience. Yeah, it is. And
Thank you,
we
Billy.
see it all the time in our emails. So we appreciate what the audit division does, as well as all of our other divisions in revenue. So with that, as we approach the 10 o'clock time here, let's go ahead and end today's webinar and thank everybody for your participation. Again, recognizing that we'll have this posted on our website very soon, either later today or tomorrow. Okay. So on behalf of the Department of Revenue, we thank you again for participation, and you guys have a really great day. Thanks again. Bye-bye.
Thanks all.